Headlines are getting even nuttier, but the market is still climbing a wall of worry, with daily breakout points continuing to be key references to assess bull control no matter what the news is. My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team where I head up our futures room and our swing report. In this video, we'll cover what to look out for next week to keep things in perspective and stay on the right side of the market. So let's get into it. Starting off with SPY here, the overall market. All right, so last week's news like feature or whatever was a little billionaire quarrel, right? Trump and Musk getting into a little tit for tat here on Twitter tit for tat. And the market did not respond to that well, which it's kind of an odd thing, right? Like because you wouldn't think that there'd be any like direct effect on the economy, but the markets hate uncertainty, and so that's really all that was. And I don't even really care to get into it, honestly, because whether or not they kiss and make up, I don't really care about that, right? Like ultimately, the market's going to do what it's going to do, and just like we were talking about climbing the wall of worry, how to assess whether or not the market is going to keep continuing to climb wall of worry during all this tariff business and negotiations, and the tariffs are on, the tariffs are off, trade talks are going well, they're not going well, whatever. What do we do, just to stay on the right side of things? There's not been really any bearish sentiment at all in these videos, or at least not meaningful bearish sentiment in these videos, just based off of the fact of these daily breakout points, right? Just continuing to watch these daily breakout points. And if these buyers continue to defend against these daily breakout points and prevent sellers from finding acceptance back below them, well, then there's really not really any issues. So as of right now, Thursday was the day where those headlines came out. Or I don't know if they were really headlines, I guess, but Thursday was the day when they started sparring each other online, like some kind of COD waiting room or something. And if you'll notice, the low of the session on Thursday was really just a test of the value area low of this structure established from 516 to 520, which was the supply, the local supply that was in the way, giving buyers problems over here, giving buyers problems over here. And then eventually in the first half of last week, the buyers flipped it into demand by getting over 593.06. And you can see that the close was pretty much right at the point of control of the structure, which is also roughly the daily no change level. This is the daily no change level because here's the area of local daily demand that we just broke out of. So this breakout that was established on June 3rd is being affirmed as long as you're holding over 593.20. And so drop and pop at this daily breakout point is fine, right? It's not that big of a deal. And then on Friday, you can see that we got a higher open, and the low of the day was pretty much the value area low of the all-time high supply. So this is the all-time high supply right now, right? This 1129 to 1217 structure. It's just sitting at the all-time high, and the value area low of that supply was clearly the problem for these buyers during Tuesday and Wednesday's trade, where you opened pretty much right on it, couldn't hold above, and then you move lower, back test the area where you just broke out of. So really, I think the news kind of just accelerated what was a very reasonable sequence anyway. So anyway, the low of the day being set at the value area low is quite notable. If these buyers continue to just stay within this structure's value area, that's pretty solid, right? As long as they're chipping away at the supply in here, well, then obviously these buyers are doing a pretty good job. If they're chipping away at the supply in here and holding over this daily no change level, that's essentially they're advancing in two different ways, right? They're holding over the local daily demand, and they're also chipping away at all the inventory that's sitting here at the all-time high. So that's pretty much it. There is a little bit of space for a daily higher low over 591.05, but really what I care about primarily is just these 593.06 and 593.20 levels, pretty much the same level. Basically, this breakout point, this structure's point of control, because if you can't find acceptance back under 593.06 and you continue to affirm this guy's demand, if you continue to affirm this guy's demand, then we're positioned well to keep chipping away at this inventory. All right. Okay, so no matter what happens next week, it doesn't really matter, what they say about each other. It doesn't matter what they say is even true. Doesn't matter if the trade talks are going well or going poorly. None of that matters. It doesn't matter if I don't know if Musk, Trump, they go on a triple date, right? And they find out that their relationship only works if it's a polygamous one, right? Like Trump and Xi, no good. Trump and Musk, no good. Musk and Xi, no good. But when they're all together, working as one unit, that's when sparks really fly. It doesn't matter, right? What we care about as technical traders, primarily technical traders, of course we care about fundamentals, but We care about how the fundamentals translate into technical references. Okay, we make our decisions based off of technical references. So as long as these technical references are not violated, it's all good. Or rather, as long as we don't find acceptance below these technical references, these buyers are doing just fine. Okay, so that's pretty much it. And at this point now, there is a lot of space for, or rather, you know, if you don't consider this rinky-dink ones, I really just consider this one big move on the weekly. So I would say anything over 481.80 is going to be good for a weekly higher low. And the fact that we still have these unfilled gaps here, it's quite bullish, right? Like gaps do not have to be filled. You know, you can just look to the left here, and I'm sure you'll find here's an unfilled gap, for example. Here's a lot of unfilled gaps, right? That's back at 444. Like we would have to correct 25% from here, 30% to fill these gaps here. Here's another gap, right? Let's see here. Nope. I'm sure there are more gaps over here too on this big rip up. Here's another gap, right? This we would need like a 50% haircut from here. I mean, certainly it could happen, but man, if we were to come back and fill these gaps, like wow, that would be a huge buying opportunity in my opinion. Or America, as we understand it, is over. Which you know, then hopefully you have, you know, water, food, ammunition, whatever. Anyway, so that's pretty much it for the SPY. Moving on to the Qs here. Hang on a second here. I do think it's still pretty reasonable to be looking for trade in here. Like now, this is enough space over the July 2024 high that you would expect these buyers to look to defend this structure if we did have some retracement. I think we already have a zone set up there that's just, you know, we're waiting for it to see. I would still use this. I think this is still a very reasonable area for trade on the SPY. Basically, if you hold over this 310 to 42 structure, then we continue to affirm this breakout. If we continue to affirm this breakout, then we should keep seeing balance like this, something like this, right? So that's pretty much it for the SPY. Moving on to the Qs, it's a pretty similar situation, but you could argue that the Qs are looking a little bit better, right? They are, I think they're a little bit closer to the all-time high, 2.2%, see, 2% and change here, just a little bit closer to the all-time high resistance. And this daily no change level, right? Again, another drop and pop here, right? So these buyers, the reason why I would say there's a little bit of relative strength here is because the sellers were not able to come back down and even get close to the point of control of this structure, whereas for the SPY, they kind of traded back down into this key structure here, right? But at the same time, they did lose the daily no change level. Again, it's drop and pop there. But you can see how the bulk of the volume, at least locally, is down here, closer to 521.83, and the QQQ sellers failed to touch down on the value area high of just this local area of demand. I think that's a very notable failure here, but at the same time, you'll notice where the high of the week and Thursday was pretty much the low of this all-time high structure over here. This is the only supply that's up in the way before new all-time highs. So again, if you look at the SPY, there's a lot more inventory here, right? That's hanging out above the SPY, as opposed to for the Q, there's only just this little bit left. So that's quite notable. And if the Qs do break out, or I should say, if the QQQ does break out and Cube, then that would be a good look, right? But you want the overall market to affirm that as well, right? Like if the ES and the Dow, they can't make new highs while the NQ is ripping, that's not going to be the ideal situation, right? We want everybody ripping to new highs together. So we definitely want to see like XLV and XLF also start seeing some rotation if the Qs start to retrace, if they pop and drop over the new over creating a new all-time high. So that is let me see here. That's pretty much it for the Qs as well. All I really care about for the Qs is, can these buyers continue to affirm this breakout by holding over 526.48 and hold over 520.87 to affirm this local area of daily demand as demand. As long as they're holding over this fella's point of control, 520.87, they affirm their structure as demand and they're positioned well for a go at the all-time high structure. These are just facts, you know. So anyway, that's pretty much it for the trade zone. I think down here, I still, you know, for a bit conservative, I understand that, but I do think that if there is some kind of meaningful selling that enters the market, we're probably better to look for like a weekly higher low. So I would still be looking somewhere in here. Again, it's pretty much based off of this 3.6 to 4.2 structure that for the SPY and the ES, it's basically this guy. It's the same. Okay. Moving on to the RUT here. So for the RUT, relative weakness, obviously relative to their 3.4 to 4.2 structures, right? They only just now are starting to see some acceptance above this early March to early April structure. But from a session-to-session perspective, there was a lot of relative strength on Friday with the gap and hold essentially. And notice that there's another incomplete gap fill here, right? So the RUT, it should be the relatively weak index. And not only did it not fill the gap, but they didn't even backtest this prior high over here. So this is very notable strength. even though this session was just completely balancing, just pretty much completely traded sideways. This is a pretty good general rule of thumb. Is like when you get a big gap, and this one wasn't a huge gap, but it was a fairly sizable gap. When you get a big old gap, very often you get bounce. And so if that's going to be the case, then you're looking for a responsive trade on that session. And that's just like a good general rule of thumb, right? Whenever there's a big gap, very often you'll see some balance. That happened recently, right? With I forget. Even this, right, was kind of a balancing kind of a day on the 12th. Right, you spend most of the session just kind of trading sideways because the overnight session caught a lot of people off guard, and so that move kind of needs to get digested. People during the regular trading hours need to like figure out, okay, what am I going to do? So a lot of folks are kind of just rearranging their positioning whenever you get a large gap. Anyway, so for IWM at this point now, these buyers are positioned well for a go at this fellow over here. It's very clear what the next key reference is for the RUT. It's going to be this guy here, 213.97, which is the low of all of this supply over here. It's obviously the problem in the way that's the next buyer objective here. So if these buyers can keep holding over 210.13, their next objective should be 213.97. And that's really it. If the sellers onto the market next week, then it's really just all about the key references from this 3-4-4-2 structure, which have worked so well, right? You were holding the point of control over here, hold the value area high over here, roll over, tag the value area low, pop back to fighting for this point of control. This low of the day was pretty much right at the POC. This low of the day was pretty much right at the value area high, which was, and they were pretty much, well, this one was a miss, which was a pretty good indication that these buyers were starting to edge out relative to the structure. And then again, you get this key level affirmed over here again. So I would just keep watching these guys for key downside references. Again, the value area high is at 207.08, and then 205.46 is that major point of control. Do we have a trade zone for this guy? It's probably way down there. That's probably too conservative now, right? So at this point, for the RUT, I would say you can probably do something like this now, right? You're trying to get to this point of control over here, and as long as you don't lose, this probably doesn't need to be this low here. Something like this, I think, is pretty reasonable for the RUT. Looking for a retracement play. If you retrace back into this structure, you probably see the lows of the range, but if as long as you hold the lows of the range and then get back over to a 546, these buyers should be trying to get here. So I think that's a pretty reasonable setup for RUT. Moving on to the Dow here. So the Dow is just testing this key supply that's in the way right now. I'm watching this guy as the key downside reference for 1655. This breakout from September, mid-September, is being affirmed as long as holding over 416.55. And then here is the early March to early April structure. Again, every single index has this early April to early March balance. And as of right now, these buyers are barely making their way back over it. So in that sense, it's actually showing me some relative weakness compared to the RUT, but of course the RUT bigger picture is a relatively weak name compared to the Dow. So I'm thinking we're considering this pop and drop here at the value area high. I would not be surprised if the Dow continues to just trade sideways in here. I don't think we have a trade zone set up for here, or we do. That's fine. This is still a very reasonable place for trade, in my opinion, where you're just basically looking for more rotation within this structure and a lack of acceptance back within here. I think that's still very reasonable. Space for a weekly higher low as well, or rather, not that much space. This is just a little rinky-dink one here over 413.83. Depends on how you look at it. Again, I pretty much always care primarily not so much about like the weekly pivots or daily pivots. I care primarily about like what prior order blocks are essentially, right? These areas of balance where the market saw determined to be more or less fair price to do business. The market is always trying to find fair price to do business. And then when there is imbalance, then it's looking for a new fair price to do business. And so it's either always trying to affirm or negate what's already just happened. So if we do see selling in the market, then we just want to look back to these prior areas where there was value established to look for those potential plays. So I think this is still a very reasonable place for trade for the Dow. Okay. And if you see higher highs next week, then eyes on the highs of this fellow over here. This is clearly the supply in the way right now, 440.69. And this early March to early April structure is being affirmed as demand as long as you're holding over 425.22. Moving on to the dollar. So, man, this one is really making us sweat here, making us work, but making us wait, I should say. But I still think this is a very reasonable place for trade. We are still just chopping around, trading sideways. Remember, this This structure over here is the structure that made for all of these lows down here. And if they can find acceptance back over 99.800, then they should try to make their way back all the way to the other side of this big old range, just like what happened over here. Here's the key structure that was problematic here, problematic here, problematic here, problematic here. They battle for it, try to hold above, and then they fail, rotate back down to the lows. So essentially, this idea is just looking for a repeat of this idea, just like this idea was essentially looking for a repeat of this idea, this idea, this idea, this idea, this idea, and this idea. You know, that's just how balance works. And whenever chart is balancing, you know, I find it's just always easiest to just identify what the key structures are, right? What are the key structures that's controlling, that's maintaining all of this balance? That's where your best value plays are. Even if they don't work, it is what it is. The best value was still there. Much harder to take trading here and figure out a decision, figure out a direction. Whereas at the extremes of the range, you know that if the structures that are containing the extremes of the range get affirmed, you know you're playing to the other side, right? It's just like a football match or whatever, right? Like if one team doesn't score, can't get in the end zone, what are they going to do? The other team's going to try to run to the other side, right? That's it. That's just how it goes. Anyway, so I just continue to maintain this is a very reasonable trade zone, and that's it. NVDA, so now that we have this little higher high here, I know it's not a lot of follow through on this higher high, but I still think it would be reasonable now to walk your runners. If you initiated in here with this trade zone that was shared months ago, you can walk your stop up to under this low now, 129.16. Worst case scenario, you get, you know, stopped out for like a 40% gain. You know, that's not really a bad thing, right? So anyway, at this point now, these NVDA buyers are testing the all-time high supply again. Very notable, right? To get a double top rejection essentially from the value area low of the all-time high supply. It's a very reasonable place for these buyers to run into problems. And it's not, you know, it's a bit of a red flag, but it's a red flag in that they're not advancing well. It's not a red flag in the sense that these sellers are advancing, right? The sellers, in order to advance, they have to get back under here. 137.40 is essentially the daily no change level right now. This most recent breakout over this local area of demand is being affirmed as long as you're holding over 137.40, as is the case right now. So that's all that we care about heading into next week. And I would say, you know, if you're an aggressive seller, I think this is a pretty reasonable time to be looking for these session to session setups, right? Essentially, you know, a more patient seller, you're going to wait for a move under 137.40 before getting aggressive here. So you're going to wait for a drive down under here. Now you have all this little daily supply over here. If it makes space for a lower high, great. You can look for a sell against here, stop no later than here, and you're playing back to get here, playing back to get here, because there is certainly the potential that NVDA is just balancing bigger picture. At the same time, though, you know, one of its peers that it's like very correlated to Microsoft is now breaking to new highs. So at the same time, you know, maybe you don't want to be an aggressive seller. I'm pretty much never an aggressive seller in NVDA. I just, you know, hold, I initiate, hold those shares, sell credit around it, sell CSPs to lower the cost basis, and then rinse and repeat. So that's pretty much it for NVDA. For Bitcoin here, so honestly, this looks pretty good for Bitcoin, right? So recall what we care about right now. The key level, the daily no change level, 103.110. Why is that? Because we broke down from this area, right? That was being affirmed as supply as long as we're finding acceptance under it. But now these buyers are firmly back within this range. So at this point now, what's the next key reference? Next key reference is this guy, right? This low over here, 106.632.35. Very, very notable for these sellers to make a lower low and then just only get it to here. So they couldn't wipe away any of this. So this bar, right, the consolidation of this bar is what? This, right? So here's the move up. This consolidation of this move, right, is continuing to be affirmed. So essentially this move is continuing to be affirmed as long as you're not finding acceptance under 103.498.85. These sellers needed to take this guy out and come back down to here to really press the advance. Just because you have some supply over here, technically the sellers are not really advancing yet, right? This is a notable defense, right? For these sellers to reject from the January 2025 high, create a bit of supply and move lower, but this is still the area of demand that they needed to flip in order to into supply in order to really say that they're moving ahead now. And so the fact that they've not done so, and now you have a good amount of space over the point of control, 103.498.85, that's a good look for these buyers, right? So now what these buyers should look to get done, if you don't find acceptance over 106.632.35 and then you begin the retracement, these buyers should try to defend this low over here, 103.110.01, this guy over here. They should try to defend that, which would pretty much be the best case scenario. It's roughly the same as defending 103.498.85, which would affirm this guy's demand. Affirming this guy's demand keeps these buyers positioned well for this, another test of the all-time high supply. So we can mark this up as well. right? So the key point of control beyond 106,632.35 is going to be 108,993.39. If acceptance over that guy affirms the all-time high supply is demand, and this all-time high supply is pretty much a proxy for the January 2025 high. So affirming this fella as demand is essentially saying, okay, well, higher prices relative to the January 2025 high are being accepted. Okay, that's pretty much it. Space for a daily higher low over 100,377.01. Anything over that's going to be good for a daily higher low, and that's pretty much it for Bitcoin. And if you're still in a runner from here and you gave it some wiggle room and didn't stop out here, I think it's reasonable to walk it up to there now. More conservative stock can just be here under 97948.56. Moving on to Ethereum. So this is really just trading sideways here. I still think this is the most reasonable place for like a retracement play, weekly higher low play. Because, well, there's just been so much balance back here, and the lows of all of this balance have been dictated by this guy. So bottom fishing off of this guy, essentially looking for a repeat of all of these holds over here, all of this hold over here, and this battle over here even was good for positioning. I think it's still very reasonable. A more aggressive operator, you can be playing in within the balance, right? So if you're looking to play like bottom fishing off of these lows here, right? And then looking to get to the other side, chopping it up, see if you can get your cost basis really low so that you can even potentially get a stop under this point of control. That'd be great. But personally, if I was playing within this range and it just came out of the range, I would just stop out of the position and then look to reinitiate lower as opposed to like just holding on to it. So no change really for Ethereum. Lots of space for a weekly higher low. Anything over 1383.26 would be good for one, and that's pretty much it. Moving on to uranium, finally, for URA. So the URA is looking pretty solid here, right? It is testing this key supply that's been the problem for these buyers ever since 2013 or so. You can see the low of the structure has rejected price many times. The value area low of it has also rejected price many times. And this move is straight off of the lows. So I personally would not be surprised if we start to see some retracement sooner rather than later. Like, this is a crazy move off of the lows, huge move off of the lows. And if they do retrace, I still maintain this is a very reasonable place to be looking for that retracement to end. Because, well, this guy is essentially sitting on top of all of this structure over here. It's already, it's the market has told us that it's important many times in the past. All of this choppiness over here was essentially dictated by this structure. So I'm thinking, and that's roughly like a 50% retracement, right? Roughly a 50% retracement. I think that's a very reasonable place to be looking for retracement plays. I'm curious to see it would essentially also just be a back test of the pivot, right? And so we want to see this pivot hold. If this pivot holds, should be to the R1, just like over here. Okay. So that is it for trade review. Let's see, for trade review, up and down week, although it ended up being a pretty solid week, but there was definitely some choppiness in there. I'll do my best to try to be swift with this. This time I did prep a lot throughout the week, hopefully to facilitate the some brevity in these videos. But anyway, so for starting it off of the week, I started June 3rd is actually Tuesday, so it's not Monday. I don't usually trade too often on Mondays, but yeah. So on Monday for the rut, on Tuesday, excuse me, I try to buy right away because here we were gapping up. So, think about what happened here, right? Like remember that the way that I like to look at it is the context gives you the bias, right? The bias gives you your tactic gives you the entry, stop and exits, and then that gives you the R. If your R is good, then you're great to fire away, right? So I think, again, very succinct way of looking at it. If you apply, I think it matters a lot more. Like if you're obviously if you're watching these videos, you care about like trading educational content, right? I think it's much more valuable to think about how to trade, right? When you're looking at what other people do, ask yourself why they do that, and how they think, that matters a lot more than what they do, right? The how and the why matters a lot more than the what. So anyway, what is the context here then, right? The context is the sellers spent like 5 sessions trying to negate this breakout, and they could not do that, right? And so now you had a gap up open over Monday session, and it's over the point of control of this 3.4 to 4.2 structure, which I know has been meaningful in the past. It was my selling target, right, a bunch of times, and clearly a battle for it over here. So I was happy to try for a gap and go play, which did not happen. So the first one, I just bought the pass back over the open. I got it all marked up this time, did my homework. Oops, I didn't organize this though. All right, so let's see. For 6-3, these are the references that matter. So right off the jump, I just bought this pass back over the open here, had my stop under the low, stop under the low day, looking for a chop under the overnight high. Here was the overnight high, and it doesn't get there, so I just stopped it out pretty soon after. And I was looking to play to the 3-4 to 4-2 value area high. That's over here, right? So I'm thinking if we hold from here, they should try to get here, right? And obviously they do get there eventually, but they didn't get there right after the jump. So, you know, nuts for me, egg on my face. Um, and then for this guy here, and then I took another attempt at the here. Can you see that? I took another attempt at 9:33, and I was just fishing off the YPOC, so the prior session's point of control. So I know that point of control is there, and I know that that point of control roughly aligns with this daily point of control, right? So there is some confluence there, right? And so I just see this, I see a miss, I buy that, chopped it up here at the value area high of the prior session. No, I'm sorry, I was looking for a chop under 76.1 first. Hang on a second, I should have that. Oh, that's here. That's just the high of the end of the day structure, right? So I'm looking for a chop over there, which was a very solid R, and we do get that chop. A couple minutes later, get that chop, and it was just a high end of day structure, pretty solid R, blah, blah, blah. Looking for more out under the low of the open candle, so that's just over here, right? So this is pretty solid R. I don't recall exactly what the fill was, but it was just sometime buying this pass back over, something like this. This was 2R. This was probably closer to 4R, something like that. Pretty solid R. And it was cheap too, right? Like even if you're really late, it's only a couple points off, right? So you know you can do 10 contracts or so, and it's really not going to be that much damage, even if you're wrong, right? So you know whatever 10 contracts on like whatever on 1 point risk, it's not a big deal. So anyway, looking for more out under the low. Okay, so then the back test is key to see if the day plus buyers can stay control. And then I was out more at 78.8, I think, which was that's just under the 1 minute candle here, right? That just like eights, they're lucky or whatever. And I'm just saying that the YPOC and the daily point of control confluence, to me, that's a gift. And then I get more out at the 3-4 to 4-2 value area high. Remember, that was the original target that we were looking for. So on this day over here, January 3rd, after these buys, out more. And then the last exit, I was looking to exit at the test of 208.03. And that's just because of this, right? 208.03 is just the local resistance here. All right, here, just the local resistance over here. All right, and you do certainly get more follow through over it, but I don't care, right? I just want to play to where I think that these buyers would likely have problems. They didn't really have that much problems, but I would be lying to myself if I thought I'm going to exit at the high of the day there, right? I would have probably just rolled through some chop and probably just ended up stopping out anyway. So at roughly around that level, so I'd rather just save myself the energy. That's just me. And the way they handled that was just after it took out over, as soon as it was over 208.03, I was just walking it up on the 1 minute stair step. So once we got over that 208.03 level, 208.03 level, that's like somewhere in here, I was just walking it up, and I think it was this exit, 11:49, 10:53 was just okay. So this guy, right? So we're past that resistance level already, and I'm just walking it up on the 1 minute stair step. Totally fine with me. Very, very pleased with that exit. Okay, and then 6-4 was pretty much a non-event day. Like I was just trying for a bunt play. I don't regret that, but it was a loser kind of a day. It was a very, very small control loss kind of a day, so I have no problems with that, no regrets at all. But essentially, I'll just walk you through it. So essentially, we opened up right here on June here. So we opened up here on the 4th. On the 4th. So we opened up pretty much right at the value area low of this all-time high structure, and I'm pretty much primarily biased long right now, because as long as we're affirming daily breakout points and we're holding over daily demand, then I'm just kind of sticking with longs, writing off sells until there's some kind of overhead supply. Does it mean that I'll miss the top? Yeah, it does. Do I care? I do not. I prefer to bias long in general, just because, well, I mean, you tell me, right? If you're an index trader, especially the SPY, which way should you bias? Like perma bears out there, I don't get it. Do you live your best life? But like, I don't get it. Like, so anyway, let's see here. Yeah, so we're here. And so I'm thinking, all right, well, it's a strong open. It's a strong open near the high of the prior day. If these buyers press from here, they should try to get to 599.58. That should be their next objective, right? So I just buy the. Oh, I didn't post those, but it was really nothing worth writing home about at all. So here, let me just see, June 4th here. I just bought the pass back over the open, chopped it up at the overnight high, stopped out the rest. I tried it one more time, and then that was a full stop. And then I just didn't do anything for the rest of the session, I believe, which is fine because the session was a whole bunch of choppiness, not really anything going on. And then 6-5. This day was pretty active, more active than I think I should have been. I was kind of multitasking here, looking at like managing cover calls and whatnot. So I definitely felt kind of antsy, which is a bit of a red flag. Excuse me. I probably shouldn't have been so active, and I think that my pacing was slower than it actually was because I was multitasking. And you should never really multitask, but what are you gonna do, right? I have other accounts to manage. So anyway, I'll just walk you through it here. So for the NQ here, 6-3, let's no 6-5. So for the NQ, the daily context, first of all, is this. All right, daily context for Thursday is here. So it's a little bit of a gap up open. And if we do hold that gap, I know we're trying to get to 532.46 next, right? If we're going to hold this gap up open here, they should try to get to that all-time high supply. That should be their objective. So I was just playing to get to that. I just wanted to I just bought the pass back over the open. It was very, very low risk, right? Super low risk. I didn't even give it wiggle room under the regular trading hours high because I need this trade to work right away. Because what happened was you got this incomplete fill and then you move back over the open. I don't want wiggle room here, right? I want this trade to work right away. And I was aiming for this pre-market high that didn't see follow through. So here's the pre-market, right? And here, this is a pre-market reaction to, I think, data. Yeah, it was data. And it didn't see follow through. So I know that if these buyers press from here, they should try to affirm this breakout, right? Again, that's the same lot. We talk about this concept all the time. And I just missed it by like a couple of ticks, and that was honestly really dumb because it was only one tick under there, and that's just me being dumb. I should have aimed a little bit lower under that level. That's typically what I like to do because I want to be out before the failure point. So a bit of a red flag error, and I said bummer, missed it, but it was a dirt cheap stop. It was something like 8 or 11 points or so. No, it wasn't that much. I got a pretty good fill. It was like 36 points, something like that. Total. I mean, for the NQ stop, so is what it is. And then I tried another pass back over the point of control, and so the prior session's point of control is over here. Where we at? So prior session's point of control is over here. So remember, whenever you're playing for like momentum with a gap, right, you kind of have to give yourself enough risk capital to play for the incomplete fill, a potential play at the regular trading hours high, value area high, and the point of control. You should be prepared to play at all these locations, so you don't want to lay all your risk out on one attempt. Otherwise, the trade could work without you. Like you would have to miss it if you hit your max loss. So I buy this pass back over the point of control, and I look for the chop. I forget. I think the value area high first. Yeah. So I buy this pass back over the point of control, and this risk was a little bit pricier, but to get to the value area high was about like 1.4R, something like that. Chopped it up, and then I was looking for more out at the open. As a typo there, we should see YVA. Looking for more out under the open. I chopped it up under the open. Oops, you can't see that, can you? So I chop it up under the open there, and then, so that's from here to here, and then here to here. So then you pretty much recover and then some, more than recover what was the loss over here. And then, let's see, where'd it go? And then, blah, 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 stop the rest, no regrets. No, I'm sorry, that's over here. And so I tried again, pass back over that should say the YPOC. Pass back, I tried it again over here, right? So we stop out the rest on this move. So on this buy, this one over here, right? That gets to the value area high. That gets to the open. You stop out the rest over here. And I tried it again here because it was dirt cheap, right? So here, remember, I'm playing off of yesterday's point of control, right? So it is stupid cheap to buy this pass back over here. And I was just trying to recycle that play. I figured these buyers are still trying to play defense here. And so if you buy this move back over, it stops under this low. I'm trying to get to here. That's like 2.2R just to try to get to the value area high again. I thought it was pretty reasonable, although it fails, is what it is. What can you do? I was actually eyeing it over here, but the risk was just too high. I wanted to see, I wanted to buy this pass back over this point of control, but it was like 40 points risk, so it was just too much. And then over here, I tried it one more time. Let's see, bought the back test of the 1 minute stair step looking for a chop at the PDC. So I bought this one because the ONL was like over here. I forget where the ONL was. Hang on a second here. I didn't mark that up. My bad. ONL was here. Here. Okay. And so this was the ONL on that day. And we're over here. And so I thought, okay, hang on. And so I see this miss of the ONL, right? So first we drop and pop at the overnight low, a notable failure from the sellers, and then we missed the overnight low. So I just bought this retracement here, and then I threw my stop under the low of this move. And this was a pretty costly stop. This was like 20 points risk per contract. That one was costly. That made me back in the red. And then so it was like a very up and down day with pretty wild swings. And then at this point, though, let's see, at 10 a.m., I noticed that at 10 a.m., the rut was doing this. Excuse me. At 10 a.m., the rut was here, right? So this is the value area high, right? And so I figure, okay, if the rut is going to hold this daily value area high, where should they try to get to? They should try to get to the high of this local range, right? Because this is now a local 3-day range. So at this point in time, on the rut, I switched over and I think, okay, I want to be a buyer here. Let me hide this 6-3. I want to be a buyer here at 10 a.m. I make that post. Okay, I bought this stair step break, and I'm looking to get to the overnight low first. Looking to get to the overnight low for a chop, and I was gonna go eat after that. And it's actually a bit of a red flag because I bought this wrong, and even now as I'm looking at it, it still looks like it should be better R. So I think there's just some kind of optical illusion going on that I don't understand. But I bought this SS, and I was looking to get to under the overnight low, and whatever. When this is not here, to me it looks like 1.5 at least. But when you measure it out, it's 1. It's like I need this thing here for me to even see it properly. I don't really know why. I don't know. Maybe it has something to do with this. Either way, kind of a red flag to be so off with that estimate, but is what it is. And because the risk was very cheap, I was able to stay sized up for that, or be sized up for that. And so I was looking out for more under the 93.2 level, and the 93.2 level is just this guy over here, right? Like if they're going to advance beyond the overnight low, the next place where these buyers should probably run into some problems is here, right? Which is exactly what happened over here. So chopped it up again, and then took one more exit near under the regular trading hours low, I believe. Yes, looking for more out under the regular trading hours low, and then for the rest, I wanted to hold to play to the daily value area high. Again, that daily value area high is, hang on a second here. Potential hold. Oh, I'm sorry, for the potential hold of this daily value area high, which should have these buyers trying to get here, and that's what I'm saying over here. Should have buyers attempt rotation to the high of the local range. And so that's what I was looking to do. So I chopped it up under the regular trading hours low. And the reason why I was doing that was just because I was just being protective, right? Because while they did hold this guy over here, which should have them try to get back up here, at the same time, if we're still under the regular trading hours low, then these day plus buyers are still, day plus sellers are still in control. So, I didn't really want to wait and see, is it gonna get there? So I just chopped it up just under the regular trading hours low. And then I bailed on the rest at 12:08 because oh, that was the high of the range. That was pretty much the highs of this local range. So if we just zoom out to like the 15 or something like that, at 12:08ish, 12:08, yeah, we're like pretty much in here at 12:08. So I figure we're just really playing to the highs of the local range. And I'm very happy with that. Even though we did see fall through the next day, I definitely would not have wanted to see the play come all the way back pretty much to my entry. That would have been very rough. I don't know if I would have held it through that, to be completely honest. I have no idea. So, and I think in the overnight session as well, they made lower lows. So it might have even taken me out and then made that move higher, which would have been very frustrating. It did not. I'm wrong about that. It did not. So anyway, that's pretty much it. On Friday, I had to trade too, but it was like pretty much a nothing burger trade. I just tried playing this gap up with options because I live stream on Friday, so I didn't want to like be super active with futures and be distracted and then make the stream get really long. I have some guests or whatever that I wanted to tend to. So I just tried a vertical spread, which was too aggressive thinking back on it all. Like the gap was pretty big, odds for a gap and hold were pretty good. And so what did I do? I just bought I put the vertical spread on the pass back over the open, and then on this new low I just cut it, because once we saw that new low, the odds of a gap and hold occurring on Friday increased significantly, which is exactly what we got. We just got a gap and hold. And so I don't want to be in a vertical spread, right? That's just too much of a directional bet. And so I kind of rushed into that trade. It was an error. What I should have done instead was try an unbalanced butterfly, right? Where I could have tried to put something on for credit. So buying buying one vertical here and then selling 2 or 3 more verticals, targeting this area. That would have been much better if I could put it on for credit, because then I'm protected from sideways to down. I would just keep the credit, and the only upside risk is if it blows past the verticals, the sold verticals, which I mean, like, pretty unlikely in my opinion, especially for a summer Friday. So that's pretty much it. At the end of the day, or in the middle of the day, I put on some iron condors just to collect some credit. I was still down that day by like a few $100 or whatever, but it's pretty much, that's a nothing day in my opinion. So anyway, that's pretty much it for that's pretty much it for everything. So yeah, that's it. Hope you got something out of this video. If you wouldn't mind hitting us with a like or subscribe, that would be great. Helps us out a lot, costs you nothing. If you are interested in trading with a group of traders day in and day out, talking about their edges, sharing, whatever wisdom and experience that we have, check out the Chart Guys chat room, links in the description below. And if you would like for me to send scout trades for you, if you're like a busy person during the week, you don't want to bother with screeners, or if you want to see how we handled swing trades, you check out the swing report, links in the description below as well. You get an update from me, you get an update from Dan, and any trades that I do will post play-by-plays, especially if they have high conviction, then I'll always post play-by-plays, and Dan does the same. So that's it. Appreciate you tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see you next time. Farewell.